It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR bonds. Download the INR bonds app to save better.
Hi everyone, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I'm Arjun Patsati. And in today's market, we saw two different kind of yield movements. One was the government bond yields, the 10-year government bond yield, which is a 10-year gsec. The yield fell very sharply from over 7.45% levels to closer to 7.30% levels. And this is largely on the back of some news saying that the government was uncomfortable with borrowing at such high levels of yields because bond interest rates have gone up for government borrowing and borrowing costs have risen. And with such large debt to service, the government does not want to pay higher interest to investors because it's going to eat into their finances. They had sounded out the RBI to do something about it. The bond markets took this as a cue to cover shorts and take some trading positions. But on the other hand, the states, the Indian states, the state governments also are heavy borrowers in the market because they run huge fiscal deficits as well. And their borrowing costs rose very sharply in the auction to the 10-year bonds saw yields at 7.76%. This is the highest in more than 2 years. And clearly, this shows that the states and the central and the states will have to pay higher interest costs. And as they pay higher interest costs, they might have their ability to spend will be less, and this could hurt their economy as well. But the whole interest cost hinges on the fact that RBI has to start looking at inflation control because inflation, which is expected in the CPI inflation, which is for April, which will be published in 2 days' time. The expectations are that it will be very high from March levels of 6.95%. In the other markets, the Sensex and Nifty gave up some losses and then gained. But at the end, the rupee was also higher, while US Treasury yields also rose around 3.05% on expectations of higher inflation and higher rate hikes by the Fed. In corporate bond market, a lot of deals are taking place. MLDs, which are maturing in June, saw some good trades because many investors sell MLDs just before they mature and for 1 month before maturity. So Manappuram MLD was traded at 6.9%. Muthoot Finance June 22 MLD, which is just 1 month to maturity, was traded at over 8%. But that investors are largely unconcerned about the yields, whereas both in Manappuram and Muthoot, 1 month to 3 month borrowing costs are closer to 5% levels or slightly lower as well, even after the rate hikes. So hence, clearly, a lot of interest in selling MLDs before maturity. And many bonds are maturing. INR bonds has got a special analytical service that publishes all kinds of research on bonds, and we financial advisors and investors and fund institutions who follow INR bonds research analytics, data analytics services can access all our very specific research. And this is one we're doing the research that will be released to the members will be on all the bonds outstanding and how companies can issuers will refinance bonds next year. And if next year liquidity is very tight, which companies can have a stressful time in refinancing their issuances. Do not forget to download our app, Pick Invest by INR Bonds, the best bonds available, most information. And in such a market of very uncertain interest rates, uncertain economic situation as well, it is best by invest in bonds which are yielding higher than inflation, but also, and this is to be underlined, but also that there is a very investors must understand the risk of each bond. There are many bonds that are being floated as high yielding bonds, which are saying 9%, 11% yields or anything, something like that. But then unless the investors know what they are investing in those bonds, then they could end up we end up with stress time, because if many issuers fail to refinance next year, given all the uncertainty surrounding the market and inflation and other interest rate hikes, and liquidity is getting out through the system as central banks try to tighten liquidity, then all that can hurt. And if investors do not invest in the wrong bonds, then they could have a stressful time. So INR bonds quick invest gives you the most information, the most transparency, and also its own ratings score, risk score, which is rating agnostic. Thank you very much for listening in. Download our app, Quick Invest by INR now, and do not forget to subscribe to our YouTube channel if you have not done so already.